Welcome, ladies and gentlemen, to this Daily High on Monday morning with your hosts, Matt McGregor and Tone Vase. Before we came on the show, Tone made the stupid mistake of tweeting out the wrong tweet. He actually put the link to this Zoom on Twitter, but it was a happy accident because we met a new friend named Brian. And if Brian, if you're watching now, it was a bloody pleasure to meet you, mate. And we had to change it because we'd have had heaps of people coming on. And I actually said to Tone, maybe we should just do that as the show, just open it up and have
I've actually
random
done
people.
that. I done that one time. I'm like, hey, whatever. So I tweeted out the Zoom link in the live chat, and then
Yeah,
whoever will happen to be watching and felt like joining, were welcome to join. I've done that
yeah.
before.
If they were all as cool as Brian, then that would be a bloody. But who knows what you'd get? I think it'd be funny. It'd be funny. Anyway, shit. Markets look, ugh, yuck. Bitcoin doesn't look as good as it could. All's not lost, but it's not all found either. Tone, you want to take us through it, mate? Let's get into it.
Sure. I don't mind going first. Let me jump in on this. I'm in the woods of PA. I needed to get some work done, so I'm gonna be here, uh, basically for the rest of the week, and hosting a bunch of people for a barbecue over the weekend. Uh, so those that are watching that know me and have been to this place before, DM me. All right, let's go to the charts. All right, so here's the weekly chart. On my last stream, I think it was a stream on my personal YouTube channel, not on this stream. I decided to just take a snapshot of the massive consolidation we had last summer and projected it onto this summer. Personally, I don't think it's going to last this long. We're already dropping. So it's kind of like the consolidation last time, but it's condensed. You can see how we started going up a few candles earlier, and we're probably going to bottom several candles earlier. I don't think this consolidation is going to last all the way into early October before the breakout. So I'm going to delete this because it's just too long. If I could consolidate this uh, into, instead of it being 4 months or whatever this was from April to October. So that's actually over 4 months. That's like almost 6 months. If I can consolidate this into 4 months by dropping about 6 to 8 weekly candles, that's what I'm expecting. So we're breaking the MRI count, which is fine. It's actually good. I don't want to see us go all the way down to the next moving average support. I don't even want to see us break the swing lows. But coming down to, say, 63 is not bad. We're going to take a look at the daily chart, and we'll have a little bit more of an example. We have these modified lucid SARs from Matt's Alpha Numerics. If that can come down to below 70, that would be great. And then the break of that sometime at the end of next month would set us up for the nice big catalyst. I'm going to slide this arrow over. And I do still think that once we break these highs of last week, we're going to be off to the races. Let's go to the allocation chart. The allocation chart is very, very concerning. If this candle starts to close below 65,000, I will lower my position. Or if, let's say, not at the end of the candle, we're closing below 65,000, but let's say we're catastrophically crashing later today, I will also bail and lower my position. As long as we are hanging around above 65 or at 65, I'm okay with it. Even if we're slowly come down to 64, maybe even 63 and a half, as long as it's happening in an orderly fashion, I will be okay with it. But if it looks like we have a waterfall event coming in, and it's taking us to 63 and a half, I will then lower the position to something like 50% or even lower. So today it's good that I'm just here. I'm not going anywhere. I'm not traveling. It's good that I get to sit and watch the market with my brokerage account opened. Let's go to the daily chart. The daily chart gave us an MRI buy candle on Sunday, but as you can see, this is why I hate it when it happens on a weekend. It would have been beautiful if the MRI buy candle was today. If today was the MRI buy candle, I would be looking at the current situation very, very positively as I try to time a bounce off of 64.5. You can see by the arrows from the last show that we did, I was looking for a low at 64.5, but I was hoping that yesterday's candle was going to be the candle that looks like current candle. And today's candle would have been the candle that is bouncing us off of the 128-day moving average. Now, this is not that bad of a disaster. I know that yesterday was a Sunday. On the weekends, Bitcoin has a lot less volatility than on a weekday. So today is the sorry guys. So today was going to be the big day, and probably tomorrow. I will actually not take the red star candle seriously tomorrow if tomorrow we are making new lows. I'm not going to take it too seriously because I think Bitcoin has a perfect opportunity to bounce and reverse in the next, let's say, 48 hours from now. So either on tomorrow's show or the show after, I'm expecting us to talk about a buy the dip opportunity. Obviously, the buy the dip opportunity is not as clean as it was back on May 2nd, but I think that we can still get a reversal candle more likely on tomorrow's candle than today's candle. I haven't seen the S&P yet, but we will get there. Matt, anything to comment on a daily chart, or should I just like can finish out and then you go?
No, just finish out because I think I'll probably echo a few of those points when I go through it as well.
Yeah, guys, we did send the Zoom link. If some people have the Zoom link and you join us, just try to have a shirt on or something.
I did have a thought though on your 4-day allocation chart, which is it might be worth mentioning because you're not using leverage in that 4-day. It changes everything a little bit for me when I trade non-leverage accounts. I don't mind letting it slip from where you are right now. If it was a highly leveraged position, even 5x leveraged position, and you're back to your almost your break-even point, it would change things for me because I wouldn't let that trade go into a losing trade, Tone Vase 101. But because it's a spot position, I wouldn't mind. I can tolerate a lot more negative for a few months. I don't mind going into negative territory for 3, 4, 5, 6 months if I think that the market's going to recover long term. And that on the 4-day time frame, it was clear to see.
Right. Okay, so getting back to this, uh, this hourly chart looks terrible, but
Uh,
let me look at some oscillators here. The oscillators also look terrible. It looks like everything is a bit oversold, but if we reach an MRI buy opportunity at 64.5 on the hourly chart, I would find that, again, worthy of a knife catch. We have been going down, and it would be the second consecutive MRI buy. So right now, this is not where I'm trying to catch the falling knife, even though there's a possibility of a 10 a.m. reversal in the stock market, which could drive Bitcoin higher. But I would absolutely wait for an hourly reversal candle or an MRI buy opportunity. We see what happened a few hours ago at 5 in the morning on a Monday morning, 6 a.m. Monday morning New York time. Probably the worst time to ever trade in a 7-day period. The worst time is Monday at like 6, 7 in the morning. It's the one time I will not make a trade. But you can also see that the MRI buy candle, MRI bottom candle, did reverse. I mean, it didn't reverse much, but the moment it starts reversing and starts showing signs of strength in a green candle, that's when there is an opportunity for a buy. Now, this buy opportunity didn't last very long, and that's where you cut your losses and take the stop loss on the red star candle when it starts giving you a losing or a break-even trade. Okay, so right now we're of course going down, and you just let it go down and try to time a buy. If I was in any short-term trades, any trades that are daily candlestick based or lower, I would not be long in those trades. I would only be short or in cash. I would not be in any short-term trades, only long-term trades. I mean, I'm even considering cutting my trade off the 4-day chart. So obviously the daily chart is not calling for any buys right now. And I can't stress that enough. Right now, this morning, I would not be jumping in to a long trade. Now, those that use me as a counter indicator, yes, you would be jumping into a long trade right now, and that trade may work out for you, but I am not. As far as the uh, comparison to prior market, I guess, cycles, we are right on pace. Everything is still in line. We're not expected to start rising until middle of next month. If we are sitting below 55,000 sometime in July, that would be concerning. That would be the weakest start to a past halving event. But remember, we had the strongest end to a halving event we ever had. So it's not, it wouldn't be all that catastrophic to have the weakest start after a halving, after having the strongest ending to a halving event. So keep that in mind as well. Okay. Uh, Nothing really to say on oil. Markets haven't really opened yet. Nothing really to say on gold, other than gold is hanging in there. I would only be bullish on gold the moment we break this trend line here, coming down. So we would need the price to be above, I would say 2,400, 2,350, above 2,350 gets me interested in gold again, breaking the moving averages and the trend line. Let's see how the stock market began. The stock market is weakening a little bit here in the morning. Now, while I would never make the trade at 6 in the morning or 7 in the morning or 8 in the morning or 9 in the morning, I am very, very interested in making the S&P trade right around now for the 10 a.m. reversal. We're already seeing some strength. I would love to see this crash a little bit more over the next 10 minutes and then pick it up sometime 10 minutes from now, but we're already 5 minutes away from the top of the hour. This is where I would be trying to time my 10 a.m. reversal on the S&P. And if I can pick that up, let's say 5 points lower, maybe even 3 points lower in the next 10-minute candle, that would be, of course, optimal. Right, so right now I wouldn't be jumping in. I would be waiting another 10 minutes. So while Matt is talking, I'm going to keep an eye on the S&P markets. All right, I don't really have much else to say. Matt, I'm going to just hand it off to you unless you got questions for me.
No, I really want to put I kind of want to watch this S&P 500 10 a.m. reversal. So maybe we can put an indicative little line in there what you'd want to buy it at, and we can just watch it and review
Right,
it
well, it's
before
hard
the.
for me where I want to buy it
I
at.
know,
Usually I
I
go
know,
by candle
I know.
shape,
Right, I know.
but I'll keep an eye on this while you speak, and then we'll go back to it. So I'm gonna hand off screen share to you.
All right. Thanks, Tone. That was awesome. It's I'm glad you went first because you've covered a lot of the things that I wanted to look at. Please like and subscribe. Please share it with your friends. The show is growing. I counted up. We've still got 107 shows since we started this show, the Daily High, on YouTube at the moment. And we've deleted probably 10 of them because the sound or my Wi-Fi was terrible or whatever like that. We've done over 110 shows since we started, which is just phenomenal. Phenomenal, I think. So please like and subscribe, share it with your friends. Join the Discord group. We're doing the beta testing now for Bangbox, and we had our first signal 2 days ago and it didn't fire. So I'm glad we're doing this beta testing now. So we're just reviewing. We fixed the glitch there. That's coming very soon. And please use the affiliate links in the description below. All right, I nearly ended the stream there. Let's have a little look. I'll start on the weekly and work my way down. Do it the
Hey,
traditional
Matt.
way.
Okay, so for the record, I'm gonna
Yep.
draw a horizontal line of where I would be entering right now
Yep. Yep.
because the current candle is starting to rise and it's 3 minutes and like I put it in.
What price? What's the price?
Yep. Yep, and I even on the 1 minute candle, it will be clear where I put it in. All right, off you
All
go.
right. Are you gonna quote the price? Give us a quote.
Yeah, I can quote the price. It was the break of the last minute candle's high. So the price is 5,422.
Okay, we'll review that at the end
Yep.
of the show.
Yep.
All right, daily time frame right now. There is a data glitch right here. We actually closed the candle above the 7 simple moving average. Okay, you can see that right here on the 7 simple moving average. In fact, it looks like we've opened the candle below it. I hate these data glitches because this looks worse than it is, in my opinion. it I know that sounds like nothing. It's a matter of $100, but or $20 even, or who knows. But it's very, very subtle difference that we closed above the 7 simple moving average, which I can say we've closed the week above every key moving average on alphanumerics to we open the candle below the 7. But that being said, in this environment, I start to look for the next moving average, which is at 57, 9, 100, 57, 100. I don't want to see it go there, but if it was to go there, I believe it's totally fine. And it's a big time by the dip zone in that kind of range. If that doesn't hold, you start to go to the next one and so on and so forth. But I don't want to entertain this as an idea because as it stands, we close the week, a bad 1.5 weeks, really, above all the moving averages. This data glitch will fix throughout the week. We're only 12 hours into the day. I'm going to review some of these oscillators here on the weekly time frame. The EXA, which I was so bullish about this cross that we had down here, has now crossed negative once again. Doesn't matter, but
Hey
it's
Matt,
not positive.
let me ask you something, right? So, open that up one more time, the EXA.
Yep.
And so, can you put the cursor on the cross? Maybe zoom in on it, maybe so it's wider, or like
Okay.
so it's yeah. Um, right there, right. That was last week, correct?
No, it's kind of posturous. Do you know what I mean? Like it sort of would cross. You
Right,
can't.
right, no,
You
no,
could.
but if you move it one to the right, that's this week, and that's last week,
That's
right?
That's right. Yes,
Right.
but the cross
So,
came
but
when the like 12 hours ago it was here, and the 12 hours before that it was still above it. Do you know what I mean? Like,
right.
do
So
you know what I mean?
right. So this, I know this is what I'm trying to explain. The current week's candle literally just started. If we reverse tomorrow and we end up going to 70 this week, this cross
Yeah,
will disappear. So people need to be very, very aware that
yeah.
until current candle closes, this cross may not exist when you go back in hindsight.
If you're a coder, a pine coder or anything, or you just understand technical analysis and these indicators, it's a function called repainting. So everyone, it's when you see dipshit fucking losers, sorry for swearing, on the YouTube, showing you their back testing results, going, well, we just buy here and sell here. It's unbelievable. We've got a perfect results. That's repainting because this crossed a lot of times throughout that period. It just the week recovered and we never had that cross. So they're only showing you prosperous. What's the word? How do you say prosperous? Like it's false data. It's bullshit, and you have to understand what repainting is. All of the indicators that I built are not subject to repainting. We start everything on the next candle. So let's just say like there's a there's a green diamond or something. The green diamond won't fire in the bot till the next candle opens, having printed that green diamond. There's no repainting on any of the indicators I built. I'm very, very aware that this looks like, well, why don't you just buy here, sell here, buy here, sell here, buy here, sell here. We don't know how this week's going to go. So, Tone, to your point, I totally agree, mate. And thank you for pointing that out.
Now, people have to keep in mind that if this is happening at the end of the candle's life cycle, you take it a lot more seriously than in the first few hours of a weekly long candle's life cycle.
Yeah, yeah, no doubt about it. And I only mention it because it's relevant. And looking at the price, it's relevant. You know, like
Mhm.
it's bloody relevant either way. Uh, the RSI does not look super duper hot. like having come back down and we're working our way back down, but we're still in the positive territory, I suppose. It's got a bit of that divergence kind of look to it even though that we didn't get super higher here or we didn't get higher at all. We got way higher in the RSI here than we did here for almost the same bang for your buck. Do you know what I mean? That's a little divergency. And this is what I'm a little concerned about, but we're far, far away, which is the Copic curve, which is something that I super duper value, is making its way down to the zero line. Now, I do not, this is a lagging indicator, big time lagging indicator. I don't want to see this crash through the zero mark because the time it would take to build back up to get around it, we're talking months on the weekly time frame. We had our this you might notice the phantom indicator here, my purple indicator. See how this candle's purple. Well, that's built into the alphanumeric system is the Copic curve. I've pegged it right here. So you can see, wow, that's a great phantom indicator here. Absolutely sensational. It's a long only signal. Brilliant. I don't want to see that have to reset. But if that resets, we get a purple candle here. It takes a few months later. Hey, that's not the worst thing that could happen either. All in all, the markets are pointing down when you look at these oscillators and when you look at the chart just like this. I'm spending a long time on the week right now. What's the saving grace? Well, we've still got a lower low here, and we're at the moment considerably higher. So I would love to see a great higher low put in at any point throughout this area here, maybe where we already are, maybe a little bit lower, but stay above these zones right here. Stay above them, get a close, and get a recovery would be a fantastic W-shaped bottom to break the looser SARs and give us that momentum that we need to finally push above the 7 attempts we've had to get above 70. We'll go on the lower time frames. This we'll find something that we're looking for here. Weekly time frame now. Above all the moving averages, we had the bearish cross here. We're below the 50. It's working its way down to Tone Vase's MRI support and resistance zone down here at 60,000. Saving that, we're looking for a 200 simple moving average, which would definitely in this zone here give us a daily green diamond on alphanumerics, which we don't get often. I'm just going to put on the auto for a second and scan back. The last daily green diamond we had was Tone Vase's favorite green diamond of all time. It was right here. But that wave was green at that point, so that was my favorite as well. It's a different story when it comes in on a red wave, but still noteworthy that we are getting in the zone. If we get down here, I'm getting a daily green diamond. While Bitcoin is post-halving, while we've got so much momentum coming into the market, so much excitement for the next year, 12 months, 2 years, I mean, I would be very serious about taking a green diamond on the daily time frame anywhere in this zone. Going down a little bit further to the 4-hour time frame, let's have a look. We finally got below here, so now we've put in a lower low. Not great. Not great. All the moving averages are still pointing down. MRI count is low. Oscillators, nothing. It's not great. It's not great on the daily time, on the 4-hour time frame. All I can say is I'm still bullish on the market overall. I haven't given up. I haven't given up hope. It might sound like I'm a bit negative, but I'm not. I'm just going to go to the monthly because it's the start of the week. MRI top on the monthly. Sure, we can make our way down to the 7 simple moving average, 59. We could do anything. Who knows? But all the moving averages on the monthly time frame are still absolutely trending in the right direction. They're all pointing straight up. Don't know, Tone. I'm coming back to you right now.
Yeah, the monthly and the 2-month being MRI tops is a little bit concerning for me. On a
Maybe.
completely opposite note of the 1-minute chart, I stated just as Matt took over screen share, it was 9:57 a.m. This was the candle. That's when I interrupted him and said I
Nice.
would be entering at 5,422. I guess if you round, it was more like 5,423. That doesn't matter. My risk was going to be where the blue line is. That's the initial stop loss right here. That initial stop loss was $2.20. You can see how we immediately started making more than $2.20. That gives you the ability to raise your stop loss, maybe even to break even, potentially. If you did go to break even, it's possible you would have gotten stopped out at exactly 10:02. I kind of was just leaving mine there for a bit. I might have just got it up halfway. You really limit your losses. This is almost negligible loss on a trade. And look, and it's super interesting what happened at 10:02 a.m. At 10:01 a.m., the market pulled back to the area of my entry. That happens often. When this
All the time.
happens, because the S&P did not go high enough for me to take profit, like had it gone up 5 or 10 points, I would have taken some profit and let the rest ride. There's no way I'm taking profit at only 3.5 points up. So I'm still fully in the trade, and this would be multiple futures contracts. What happens after a pullback to the area of entry and then starts to reverse again, this gives me
Double,
incredible confidence to where I'm willing to
double.
double down on that
Yeah.
trade above the prior swing high. But if I double down on that trade, 100% I'm putting the stop loss up here because my new average entry is above that. And you can also see that
Same.
the secondary low was uh, right here at 10:01. And if you look at Bitcoin, the low in Bitcoin also came in at 10:01. So anyone tells you that Bitcoin is not correlated with stocks, they're crazy. It's literally to the minute. The S&P now starts to take off, starting at 10:02, and I recognized the reversal earlier than 10:02 and would have gotten in at 10:57. And again, I'm not a micro day trader. This is not my specialty. But when I have to, this is how I've traded before, so I have experience with this. And the S&P has taken off like a rocket now. And guess what? So has Bitcoin. So this was absolutely cool to watch, and we're
So cool.
watching it in real time.
Don't question without notice. Just for any new people watching the show, this is not a $5 profit in futures contracts. Tone is 1,000x leveraged if you understand how, or like, can you quickly explain to the new guys that this is not a spot buy where you've just made $15 on this trade?
Right. Right. So this right now, the futures contract on the S&P would be up $7. And for every contract that you buy in the S&P, you would multiply this by 100 and divide by 2. So this contract, one contract would be up $350 for a 7-point move in the S&P. I would never trade one contract because I hate that kind of multiplication. I would trade them in even lots. So I would trade a minimum of 2 contracts, which means I would be up $700 on 2 contracts. And I used to trade 4 or 6, and I don't think I ever traded 10. I never really got that ballsy with it, but that's basically how they would work. So right now I would be up at least $700, maybe $1,400. I would make sure that no matter what happens the rest of the day, I would walk away with at least $500 in profit. My trading day would be done, and I would now enjoy the rest of my day.
That's awesome, mate. That's awesome. And that's the dream. That's why we're all watching. That's where we want to be. I love it. I love it. All right. Keep it going. Where do you where would you move your stop loss right now?
Oh, right now, regardless whether I added to my position or not added to my
You've
position,
doubled it. You're in 4
uh,
positions right now.
right, but
You're
I'm
in 4.
saying regardless whether I did double it or not double it, my stop loss would be in the middle of this large green candle, slightly above the middle of that candle. This is known as an extended range candle. Whenever I have one of these monster candles, you can see how this candle has a body way bigger than any other candle's body. That's where I would stick it. In reality, I would actually go back to the 5-minute candle and I would use this candle as the big fat candle. You can see how this candle is literally bigger than any other candle today. Probably in the last 24 hours, it's the biggest candle. I would figure out where the middle is, and I would be just under that middle. That would be my stop loss. And if the current candle doesn't knock me out of the trade, then I would set the stop loss to the bottom of that candle when the next 5-minute candle begins.
Just keep it rolling.
All right. So this candle is over in 2 minutes. I hope this candle doesn't knock me out. And the moment the next candle starts trading above current candle, I'm now happy. I'm walking away from this trade, probably with at least $1,000 in profit minimum.
This might be watching paint dry for some people, but
Yeah.
for the real traders in here, this is great stuff. I love this. I could watch this all day. In fact, I do watch this all day, and that's
Right.
probably the
And
biggest
and
problem.
the S&P is so liquid. It's the most popular asset traded in the world. So it's very hard to stop loss hunt on the S&P. So when I say I'm setting my stop loss, a penny below this low, it's very unlikely that some market maker can move the asset down to knock out people like me. It's too liquid, and it's trades way too much. It trades $1 trillion or whatever. I'm just guessing the number, but it trades
And
massive amount that you're not going to get some whale that sees a bunch of stop losses that can knock it out. It doesn't work that way in the S&P futures.
and you're getting 2 to 4 contracts filled at limit orders every single
Oh yeah.
time. You don't have
Oh,
to
of
worry
course.
about.
Yeah, you can get 100 filled at
Yeah,
a limit order. Yeah, exactly
yeah,
at the
yeah.
price that you want. Yeah. Yep. All right. And on this note, close us out, Matt.
All right, mate. I really enjoyed today's show. I missed you on the weekend, and I'm glad that we're back. And it looks like you're having a great time there in the woods. Wish I was with you. I'm here in Tokyo. I got the keys to my house today. I'm a
Nice.
homeowner in
The big
Japan,
move's
which is
coming.
yeah, yeah. But so like I hope I'll fix the internet and I'll be out of this room. I've seen some comments like, "What is Matt in bloody grandma's house?" It's like, yes, I'm in a grandma's house right now. So I'll get my place and I'll set up a little studio and stuff in the next month, I suppose. I'm not going to move in directly. It'll take some time to shift across. But anyway, it's going to be great. Can't wait to bring you some more shows in the future. We're 110 shows or something into the series, and here's to 100 more. 4 more years. 4 more years. Go Trump. All right. Thanks, guys. See you tomorrow.
But